NITE Economics here, and today we're going to continue looking at this long-term analysis of the S&P 500, where my base case is that the S&P 500 here in the last, now going on to the 5th month, and that will officially be closing within 2 days and 2 hours, and that will be the end of February. We'll have 5 months where it appears that the S&P 500 is really starting to stall out and it's not really doing anything. In the past, when you've seen similar patterns like this occur, you see a correction minimum to the 21 exponential moving average, which as of right now is sitting at around 6,170 bucks. So let's call it 6,200 bucks. So that's about a 12% drop from current price action. So it's currently sitting at so it's about 11-12% drop from current price action. So every time we've seen this similar kind of price action where, it starts to stall out, it stays within like 1, 2, 3% of the highs. So these wicks, it starts to move up a little bit, but it's within only like 1, 2, 3%. Sometimes in some cases even less than 1% before you see a correction down to the 21 exponential moving average. And then actually sometimes it doesn't actually quite touch the 21 exponential moving average, and then it recovers and it starts to make slightly higher highs, but then you see the real correction, and many times it goes much lower. So the first iteration of this specific example is over here, and this is one that's very similar where you see 1, 2, 3, 4, 5, 6 months before you see a big drop to the downside, where the highs, these wicks, are within, this one I believe was less than 1%, it's like 0.71%, so about 6 months. And you could even, if you add this one back here, it's even more. It's like about 6, 7, 8 months of it doing this, essentially nothing, right? It's just staying at these highs. And what happens is the sentiment with amongst the buyers, they get bored essentially. They lose confidence, and I guess other buyers are like, okay, they stop buying it, and essentially the bears take over, and then there's a little bit of a correction before moving up to higher highs in the future. And again, this is a monthly look, so this obviously takes several months to years to really play out. Here's another, and actually this iteration over here is actually quite, it's similar, but the different, why I didn't add it is because you saw this drop in between, then it climbed up, and then you saw the big drop. So you see it didn't quite touch the 21 here, but it didn't show that stalling behavior, that stalling out behavior like you have over here, where you have, since pretty much October, you might even be able to add September into that, but let's just say October. From October to now, it's been about 1% from the high. So the highs in October to the most recent highs has been only about 1%, which is nothing really in the stock market, or in pretty much in any asset really. It's just pretty much at all-time highs, and it's stuck there. This one is very similar too, where you see this high over here back in May 2007, but the difference is you had a correction here to the 21, and then it climbed back up, and then this high over here, it's about 2% from this high. So I added it because it's, so under 3%, and then, then you saw the big drop down to the downside. But mind you, this was during the great financial crisis, so you saw a drop all the way down to the 377 exponential moving average, which, that's a big drop. I don't see that happening. I think that's an over 50% drop. If we were to get there, I'm not saying this is going to happen, by the way. It's like a 64% drop. That's that's a bloodbath on the streets, essentially. I don't see that happening, but one day it will happen, but I don't know if that's going to happen in my lifetime. Maybe it'll happen in yours. So let's see what kind of drop that was. 58% drop. So the drop now to the, and this is below, it dropped below the 377 exponential moving average on the monthly. It dropped to 57%. So now it would be a bigger drop to get down to the 377 exponential moving average. It would be like a 60+% drop. And the only way that could happen is a major recession would have to happen, something major. I do think there's a recession in the works at some point in the next year or two. But I don't know if it's going to cost something like that. Maybe it will, maybe it won't. It's very difficult to predict these things, but it's easier to predict these smaller drops to the 21 exponential moving average, especially with this stalling behavior. So let's continue some more examples. You can see here, it makes this high over here in December 2004, and then for the next 4 months in a row, makes pretty much the same, very close to the all-time high. Then it has a drop, and you see it didn't quite touch the 21 exponential moving average, and then it's continued to move up and to the right pretty much until here for like 2 years. Right, so this is this high was 2005, March 2005. Then you have a low here, and then yeah, so just over 2 years before you saw this major drop. And that again was the great financial crisis. Over here, a little bit different. It's making slightly higher highs, but than these other iterations. But again, it's really, it's only under 3%. It looks like it's going more up to the right, but up and to the right. But it's actually 3% from here, from February 1996, and then you had a drop that didn't quite touch the 21 exponential moving average, and then it continued moving up and to the right. So if it doesn't touch the 21 exponential moving average, it's likely going to recover and continue its way up and to the right. This one's actually very similar too, but because it's a lower high, I didn't include it. These highs here were all lower highs than this high, so it's kind of like telling you that a bear market is coming. And this was I forget the one in 1999, 2000. It was the dot-com bubble. That's what it was called. Let's see. We have lots of iterations, lots of examples of this playing out. So you could see it's sort of stalling out around here, you know. And this one was kind of, it moved up to this point. It made higher highs and it started making slightly lower highs, but it's within striking range of the all-time high. It's very close, and then it breaks down, touches a 21, comes up a bit again, and it comes back down, this time below, and it closes below the 21 exponential moving average for 3 months in a row before climbing its way out of that one. So again, it becomes very toppy, right? Investors become tired, they become fatigued. Same thing here, right? But up until this point, then you have a correction, and I don't think it actually quite touched the 21 exponential moving average here. No, it was just above it. So then it continued, made higher highs, but barely, and then you had the real correction. And this one actually came below the 21 and the 55 exponential moving average, and it actually touched the 21 simple, the 200 simple moving average. But you can see the numbers were much smaller back then. This is in the 70s, right? But you see, again, it plays this like stalling behavior where it's not quite really establishing itself well above the all-time high for it to continue up and to the right in a more commanding way. Again, you see it here as well too. You have a correction. Doesn't quite touch the 21, continues up and to the right. And then it happens again, doesn't quite touch the 21, continues up, and then it finally breaks down under the 21 before continuing up. And then you had this bear market over here, the 70s. I think this was the 70s bear market. I think that's what it was called, from 68, something like that. I've done one about gold, but that was related to this, how when this bear market was happening in the stock market, gold was going up. Here you have it happening twice, where you see it starts to stall out, breaks down, touches a 21, then continues up to the right, and then it happens again over here, and then it breaks down and touches the 55 exponential moving average before continuing up into the right. And this happens a lot in the S&P 500, in the stock market, smart stock market. You see this pattern play out where it starts to stall out. It starts to not decisively make new all-time highs, significant all-time highs, and establish itself significantly higher. Those investors get bored, and they start to capitulate, and you get at least a test to the 21 exponential moving average at some point. So that's my base case. I think at some point this year we're gonna see this play out. If you look at this, it could actually play out for a long time, right? So if you really start measuring from here, it's so close, right? It's so close to that all-time high. So you have November, and actually let's measure it out so we have some exact numbers here. yeah, it's like less than 3%. So you have November till July of 2015. So what is that? November. So November, December, January, February, March, April, May, June, July. 9 months. What would that look like for us here? So that would put us out all the way till is that it's November 2026, something like that. Let's see. We have October, November, December, January, February, March, April, May, June, July. Yeah, July. Maybe we'll see something in the summer. Although I do think that in the spring we'll usually see some kind of weakness coming into March, April, May. Sometimes you see this type of weakness in the stock market, amongst other markets, not just the stock market. We saw last, I believe it was in March of last year, in Bitcoin had a bit of weakness going into Q2. So it's a common time to see some weakness in traditional markets and other markets. You can see last year we had this correction that started pretty much February, March, and then April before working its way up into the right, like you see here. So yeah, so I think we're going to see a correction in the next couple of months, maybe as late as July. Maybe another thing that could happen, actually, it could actually come down, not quite touch the 21 exponential moving average, then come up, make slightly higher highs, then you see it really capitulate to the downside and possibly get down to this 55 exponential moving average or close to it, kind of similar to something that happened like this here. But we're not there yet. I'm kind of getting ahead of myself, but my base case is that we will see a test of this 21 exponential moving average, in the next 5 months, sometime in the next 5 months. It could be as early as next month and as late as July, maybe even a bit later than that. And again, we're looking at about a 10 to 12% drop from current price levels. Anyways, again, if you're liking the content, like, subscribe, drop a comment if you're, if you have anything to say, if you have any comments, any good feedback. And in the future, I'm going to start making less videos and probably kind of focus on making them a little bit more polished, if you will. I will likely start editing some of my videos, but I will probably from time to time continue to making these unedited raw videos, particularly once I get to 1,000 subscribers. I'm nowhere near that number. I think it's 1,000, maybe it's 100, I don't know. Whatever that number is, where you could actually start doing live streaming. I can't do that right now, but once I get to that, I will make some live streams and talk about this live. Yes, again, so if you're liking the content, drop a like, subscribe, and I'll see you guys next time. Take care. Bye.